Welcome to Investors Insight, episode number 137. A reminder, please follow us on Facebook, Twitter, and LinkedIn. Greg is out on meetings today, so it's just three of us. We'll talk about a little bit about oil, housing, and last week, and then also some economic events coming this week.
I'm Greg Powell, and this is Investors Insights.
You're listening to Investors Insights with President and CEO Greg Powell and the Portfolio Strategy Team at Five Plan Partners. Three, two.
First, let's get started. Ashley, you had some really good points on housing.
Well, we enjoyed talking about that this morning. One chief economist we follow at Moody's Analytics is Mark Zandi, and we were talking about some of his comments on housing and how Bobby said in the past, we're missing the consumer. You've heard that as a consistent theme on the blog. We really need to get the consumer back. Part of the reason that we have not had as much consumer spending is that people after the financial crisis have not been as confident to take out home equity lines of credit or cash refinances out of their house because they feel psychologically it's still either underwater or right back to even. And some of the data that we were looking at that has suggested that that's true. The amount of multiplier impact that you get into the consumer economy, and the reason that's important is that drives 70% of the market. The multiplier of that is as low as it has been since the 1990s. So what's interesting about that is that normally, if you had the pickup in housing that we've had over the last couple of years in value, the low point of that value, according to the Federal Reserve, was 2011. Well, we've added about 12.7 trillion with a T in value of the housing market since then. And we were talking about that this morning because usually when you get that, the consumer will step back in and they'll start refinancing, they'll start doing cash out refinancing and start spending. That hasn't happened this much, and there are really three reasons for that we're tracking. One is people psychologically still don't realize that their value is back up to pre-crisis levels. They still think it might be a little bit underwater, so they're hesitant. That's number one. Number two is there's a lot of consumer debt, like a car loan, for example, that is now priced more favorably than a home equity line of credit is.
Right, so it's less advantageous.
Less advantageous. And so the third thing that we want you to focus on looking forward, though, is that Mark Zandi said that we're about to reach an inflection point in that. And what he means by that in a lot of metro areas, not only is the home value back to the level where it was pre-crisis, now it's getting above that. So what we're watching carefully is will all of a sudden people begin to realize that again, start to do cash refinances out and spend money. So even though it's been low, we may be close to an inflection point, and that would help us.
It'd be a great tailwind.
It would. Tailwind's a great word.
And housing has really been a huge driver in the growth the past few years and continues to show strength.
Right, so you see housing moving, but you're not seeing the consumer move with it. That was a really good point you brought this morning.
And Trey, you had some good points on oil.
Yeah, so oil's been, I think everyone knows oil's been hurt lately, and it's opening this week kind of down as well. And the driver of that, really oil's around $40 a barrel. And we have a very big, important OPEC meeting coming up on December 4th. And so the reason oil's down is just there's been an oversupply. And really this started last Thanksgiving around this time, correct? OPEC in their Vienna meeting this time, Saudi Arabia typically up to that point had cut production to keep prices high. We saw this time last year they decided not to do that, in fact increase production because they decided they wanted market share over price. And so, that was a little contentious meeting then. You're seeing that pick up again. Over the weekend, Venezuela's oil minister said, and I want to kind of quote him here, oil prices may drop to as low as the mid-$20s a barrel if OPEC does not cut production down. You see Saudis wanting to keep production up. Venezuela, who needs a much higher price to stay above water, wants to cut it. And so we're going to see very, back and forth. It should, be a pretty interesting meeting that could come out with very impactful decisions. If oil gets down to the 20s, does that help the U.S. consumer? Does it hurt, worldwide trade? It'll be very, so it'd be very impactful. We've seen that since last year. Oil really dropped considerably, and so it's a very important time of year for markets.
Well, that's a good point you made from that Friday meeting last year. We've really been dealing with it for a full year now from that meeting. So it's very interesting you noted that.
Yeah. And historically, Thanksgiving week is good for the markets, so we'll see what happens. We've got a busy week for economic reports. Today, existing home sales comes out. Tomorrow, GDP revisions and consumer confidence comes out. Wednesday, personal incomes, new home sales. Thursday is Thanksgiving, and then Friday is obviously Black Friday. A lot of shopping goes on, and so we hope everyone has a great Thanksgiving. I know we have a lot to be thankful about here.
Absolutely.
I hope you spend quality time with family and friends. And please let us know if you have any questions. Thanks.
More information at fiplanpartners.com. Securities offered through LPL Financial, member FINRA, SIPC.